Good morning and welcome to this weekly market update from AGM Markets. There's the 17th of June 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just to basically review what happened in the markets last week and give some sort of outlook for the week ahead. I will not make any trade calls or recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.agmmarkets.com. That will be appreciated. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at the weekly Forex calendar. So yesterday, quite a quiet day, no high impact data. Tuesday, we got some overnight Aussie news, the monetary policy meeting minutes at 10 AM GMT. We got Eurozone, so the German ZEW economic sentiment. At 1:30 we've got US building permits and CPI data. On Wednesday at 9:30 AM you've got the MPC asset purchase facility votes and the MPC official bank rate votes. And at 7 PM we have the FOMC statement and economic projections, so keep an eye on that. That should be quite volatile. And for any of you that trade the Kiwi, we have at 11:45 New Zealand GDP quarter on quarter. On Thursday at 8:30 AM we have some Swiss data out. So the LIBOR rate, the SNB monetary policy assessment and the SNB press conference. At 9:30 the UK retail sales. Expect a much worse figure from the previous, interesting to note there as well. At 1:30 we have the weekly jobless claims out from the US, and at 3 PM we've got the US, the Philly Fed manufacturing index. They're expecting a slightly weaker figure. On Friday, early in the morning, for any of you that trade the Japanese yen, you got the Bank of Japan Governor Kuroda speaking. And to finish off the week in terms of the high impact news, it's from Canada. So you got the CPI numbers and the retail sales. So a fairly standard week, not too heavy. Pretty much, well, quite a quiet week in terms of the amount of data, but we have some interesting stuff, especially with FOMC. Okay, let's have a look at the charts. So I've got pretty much clean charts and all these, so I can go through all the time frames and explain everything. So this is the weekly chart. First of all, to note, last week's weekly candle closed below the 50-week moving average. I think that's quite key. I remember speaking about that previous weekly candle. Well, it was quite bullish, to be fair, but we did have that upper wick, remember. And it was also capped, I think, that upper wick by a certain fib move. So there was a level above it. I can't quite remember which one. Yeah, there is that one there. So you can see that 50%, that capped it. And I think that's quite significant, that level. That's pretty much 136.44, so 136.50s. That level capped Euro last week. And we sold off and we actually closed below that 61.8 of that move as well. The fib I'm personally keeping an eye out for is this one here. And it's interesting to note, if you had a 38.2 retrace on there, then that's the level that we're currently sitting just above. You can see this. That's the key support currently at the 1.3520s. 3 weekly candle tests there, and we're currently still above it. So keep an eye on that. If we do get a bullish candle this week and a close back above that 50-week moving average, then it could be quite bullish for the next sort of few weeks, really. But I do think it is quite unlikely that we will get a close above that, but you never know. I mean, you can already see that we've had a test of that moving average this week, and it's already had sellers have already had a reaction at it and are trying to keep it below that. In terms of the fibs in the other direction, the only one of key interest is just that is the high of the year to the low of the year, so it looks quite small on this weekly chart. I'm just going to get the 38.2 off of there. It's just nice to keep it simple in these videos. And that 50% comes at 1.3750s, so that coincides with a nice round number, 50 pip increment there, 137.50, pretty much lines bang on that as well. Some interesting resistance at that level previously as well, so if we do get a bounce up this week. That fibs, and I've just flipped down to the daily chart now, same setup, keep an eye out for there. The only other thing of interest, to be honest with you, is this support where we're currently holding it at the minute. So we've had 3, 4, 5 candle spikes below this level and are trying to hold it at the minute. So that's the 1.3530s level is the key line in the sand going into this week. You can see yesterday was a nice sort of reversal candle, actually, a nice pierce below and a bullish candle. So you can see that today's candles already start to slide. It is desperate times because there's a lot of downside around available here, I think, on the euro. So it does need to, if it's going to try and hold it, needs to post some really bullish candles. You can see yesterday's daily candle was bullish indeed. So I would not be surprised to see a bounce up for the next couple of days, but it could easily sell off and close below that level. But in terms of the key level for this week, I think that 135.30 is definitely the key one to keep an eye out for. In terms of shorter term time frames, nothing major of interest at the minute. This 4 hours it's just been quite choppy really for the last sort of few days. Last week in particular, you can just see the very choppy action. You can see we're currently getting capped to the 50 SMA here on the 4 hour as well. And that's pretty much it, to be honest with you, in terms of the euro. A couple of interesting fibs there in the key couple of levels, and that's the way to play it, I think. Of course, if you're doing intraday stuff, then keep an eye on the round numbers. Like, you've got 136 is just above this, so 135.50s, for example. So do keep an eye out on those levels as well. Cable now. So this is the weekly chart on cable. Last week's weekly candle, extremely bullish, I think. I'm not massively surprised. I do think it has been due a retracement for a long time, but it's just keeping in grind high mode, and that's the way to play it, I think. And these two small fibs have been playing out very well. So this is the ones in the year. You can see this clear on the daily. I'll flip it to a daily in a minute. So that was the first move. Actually, I will flip it to daily. It's much clearer to see. This is the first move there. Lovely uptrend, retraced off the 61.8. We rotated higher. And then the next move is this one here. So that's a fib, that next move there off this 50%. By the way, we've lost connection now. It's because my internet's just cut off. It should come back on the sec, so that's nothing to do with the platform. That's my personal internet. Having some problems at the minute. So yeah, that's the next move there. And remember, we were speaking on this weekly chart. Nice reversal candle there off of that 50%. And you can see that's what happened last week. So you do have to keep it in mind. That's why the fibs are so important. That's why the candles are so important as well. We are testing this current high at the minute. It didn't close above it last week, but you can see, there we go, it's connection back on. You can see we've already tested it this week and it's trying to hold below. And that 0% line coincides with a big round number level, and that's the 170 handle. So that's definitely the key line in the sand for this week. Key resistance. You can see it's already starting to play out on the daily. We had that yesterday's daily candle. That is quite a reversal. Ideally you'd want a red body on that candle. But the upper wick is quite interesting to note of that as well. So the weekly candle close will be very interesting this week. A close below around current levels, and I expect next week to fall down definitely. In terms of shorter term moves, the only one of interest really is, this is you got that big daily fib there. The next one to keep an eye out for, if you're aggressive sort of bull, then it will be this will be the next fib to keep an eye out for. So that's the swing low off of that fib, obviously. And that 50% lines up at one spot, 68.51, which of course coincides with a nice round number there as well. Some people will be looking at that sort of low there or that low there, but I like to keep it nice and simple and take it's clear on the weekly chart there as well. And on the 4 hour there, it's just the low of the chart, so just keep it nice and simple. That's the fib move that I'm keeping an eye out for there. And that's pretty much it on cable. Nothing else to note really in terms of obvious setups and levels. Let's flip to the dollar Swiss. This is the weekly chart. What we've been speaking about is in grind higher mode. Interesting to note last week's that reversal candle. Remember, it didn't quite test the 50-week moving average. I did mention that on the video. So yeah, last week grind higher candle. I would not be surprised to see this 50-week moving average test this week. And then it could potentially do a reversal. It can do what it likes, but definitely keep an eye on that. That's a sort of not like a sort of false reversal, but it wasn't off a key level or a key indicator, so that's why it didn't really play out. In terms of fib moves, you can see it is getting quite toppy, to be fair. In terms of the fibs, it's not a pure move here because it is sort of going range bound. You prefer the sort of the straight up moves and then the quick retraces and then moves up. But that's one to keep an eye out for. That 50% comes at 0.8869s. And then moves in the other directions, nothing major of interest. I mean, one key resistance level to keep an eye out for, I think, is this 0.90 handle. That's a key line in the sand last week. And you can see on the 4-hour chart as well, lots of tests. I mean, there are a few closes above, so potentially, yeah, just do keep them daily. Actually, it looks a bit more technical there. Yesterday's daily candle, quite a nice reversal off of that, or there is quite a bit of lower wick on that, so do keep that in mind. One move to keep an eye out for, which was a lovely move last week, was this fib move here. I mean, ideally, you'd like to see the high broken the previous high, but that was quite a big sort of spike. But yeah, it's a lovely sort of test of the 50% retrace and a nice rotation towards the upside. So that was a lovely move, and that fib is technically still in play because the 0% line hasn't been broken. So keep an eye out on that one. Aussie dollar still chopping in between this 200 pip range. We've been speaking about this for the last sort of few weeks now. You can see there, I think it's about 9 weeks there. It's just chopping in between this range. I said last week with that previous week candle, quite a bullish candle, and we did get that slight pop up, but it did test the 0.94 level, and it closed below. And you can already see this week we're starting to come down a bit, so it's just still continuing to play ping pong in between those two levels. If we're looking at the small, I mean, interesting, there's actually fake out close above there. If you want to play any fibs on it, that'll be one to keep an eye. What we've done there, John level. If you want to play any fibs, this will be one to keep an eye out for. But ideally, I prefer to sort of play the range. I'll just flip it to the 4-hour. But interestingly, there is some previous support at this level and previous resistance, so it could act quite nicely. Yeah, so that 50% comes at the 0.9323 level. There it is quite a pure move, so it's all about just keeping an eye on the price action. Also, you do have the 50-day moving average lining up in between there as well. Gold's starting to get quite interesting. We did have, remember this trend line that got broken. We do have daily closes above that, and then you can see we're now sort of it's coming and pretty much testing. We are actually below it. I would not be surprised to see it close above those, so do keep an eye on that. Last week's weekly candle, quite bullish. I mean, technically that's a sort of close above, so you can see we're pretty much sitting on it as we speak. So that's definitely wise to keep this trend line on there. I think in terms of fibs, they're all broken down now. Although actually, interestingly enough, you can see the 61.8 is trying to act as key support at the minute. You can see that quite clearly on the weekly chart there. So we had a weekly close above this last week, and we're sitting above it. So do keep that in mind as a key level. And then of course, don't forget the sort of the 1240s as well. That's definitely a key line in the sand and a lovely support level which has been holding for a couple of weeks now. And then of course the 50-week moving average as well. In terms of fibs, it's quite difficult to pick sort of a key swing high. I've just taken the sort of the high of 2000 and the high of May, sorry, I think that is, to the low of June, and you can see it's all about sort of 50% here. A nice sort of reversal at that 50%, and that 50-day moving average as well, and 200-day moving average. Nice confluence there. And in fact, the 50-day moving average looks like it wants to cross below. So I'm just going to get rid of these just to clean the chart up a bit. Yeah, so that move, actually raise up a bit there. Yes, that's very technical. You can see yesterday's daily candle, lovely reversal off of that nice bit of confluence. Double moving average, confluence, and 50% retrace. You can see we're starting to slide down already. The fib move to counter that move is of course this one here. So it's the low of June to high of June, and surprise surprise, we've already had a test of this 50% retrace and an already interesting reaction. That's of the 1262 level. So keep an eye on those two fibs. It'll be interesting to see which one wins this week and plays out. But yeah, that's definitely what I'm keeping my focus on gold this week. And of course, if you flip it down to smaller short-term time frames, you can see there on the 4 hour as well. It didn't quite test it to the pip. It got front run by a few pips there, but they're definitely the two fib moves to keep an eye out for. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube channel, which is AGM Markets, or send us a tweet to our Twitter feed, which is at AGM Markets. Okay, hope you have a great rest of the week trading, and I'll catch you next Tuesday. Thanks for watching.